Hey friends, in this video I am going to take you into my M1 Finance investment portfolio to show you what I invest in. So I know on my channel I talk about investing a whole lot. And sometimes I'll mention what I invest in. But in this case, I actually want to show you what I invest in and kind of walk you through why I invest certain ways in certain accounts. So we're going to take a dive into my M1 Finance account, and I am going to take you into my 4 investment accounts that I have within M1 Finance. Now I've got some taxable accounts, I've got some retirement accounts, so I'm going to walk you through each of those and just give you an inside view, a little behind the scenes, how the fudge is packed, how the sausage is made, to maybe get you feeling a little bit more comfortable about investing. You might not want to be investing the same way that I do, but it's always nice to see how someone else is doing it and why they're doing it. I always find that super helpful. So I'm hoping you find some sort of value in this video. I think you will once you see what I'm doing. And if you are interested in using M1 Finance to start investing, if you see that you like it as I'm going through it, then I will have a link in the description to open an account with M1 Finance. It is an affiliate link, so I do get compensated for you using that link and funding your account at no extra charge to you, but don't do it if you don't want to. It's okay. As long as you find some value from this video, that is my main goal of this video, but I would really appreciate it if you did use my link in the description to open an account, because it helps support myself and this channel, and as always, my dog Molly, which she's laying on the floor here somewhere. Okay, so let's go ahead and get into the first of my 4 accounts. I'll take you into each individual one and walk you through them. But before we do that, make sure you Hulk smash that thumbs up button. I would greatly appreciate it. So this first account that I'm going to be showing you, or that we're looking at, is a taxable account. It's specifically for my future car fund account. My free cars forever strategy is what I'm using, which I'll talk about in a second. Now, this is a very high risk strategy, and I don't recommend for everyone to do it unless you have a high risk tolerance, which I do. The only reason that I feel comfortable doing this is because my finances are in order, really in order at this point in time in my life. Because I've gotten rid of all of my bad debt, I spent a few years doing that. And also because I'm currently saving 70% of my income. So I'm in a very financially, good financial position. So the free cars forever strategy, I did make a whole video about it. You can check it out. Link to that video is in the description. Essentially what it is if I funded this account for 8 years, then after 8 years, I'll be able to buy new cars, used cars, new to me, without spending any money for essentially ever. The way that I'm going to be doing that is by purchasing those cars from the gains that I earn on this account. Now, for this one, I did choose VOO to invest in, the Vanguard S&P 500 Index Fund. The reason I chose this is because it just tracks the stock market overall, since it invests in the 500 largest companies within the United States. I didn't add bonds into this one because I'm really trying to maximize my exposure to the markets, because I want to take advantage of any gains that I can earn. So that's why you only see that I'm just holding that index fund in this account. Now, since I'm doing this, I'm also opening up myself to some risk of loss as well. So I'm very aware of that because I don't have any bonds in here, but I'm okay with that because, like I said, I'm in a very good financial position. Now with this account, I actually deposit $150 every single month, and it gets auto deposited. So honestly, I never really look at this account because that money gets deposited into this account and automatically invested without me doing anything, because I set up auto invest within M1 Finance. Real quick, I'm going to show you what this Vanguard Index Fund looks like, VOO, so you can click into it and get an idea of what it's been doing. So that was when it was last updated, May 27th. And if you want to get more details about what is in VOO, M1 Finance doesn't really have a lot of that detail on there. So what you do is you go to VOO details, and you can get a little bit more information on this index fund, but it's still almost not enough, to be honest with you. So what I usually recommend doing is, if you want to look up more information on a specific index fund within M1 Finance, just highlight the ticker symbol. So this one's VOO. I would do a quick Google search right here. And then you can take a look at Vanguard's investor website, And then also, I really like ETF.com. That one's a good one too. So when you go into Vanguard, because this is a Vanguard index fund, their website's going to have the most and best details on this. But I'll show you ETF.com in a second. And as you can see, it just invests in stocks that are held within the or that are a part of the S&P 500 index. And it gives you an idea of price and performance. It gives you portfolio. So under this portfolio management, it actually gives you an idea of what the sector breakdown of this index fund, how much it holds of what, and then also it shows you the top holdings within this index fund. So these are a lot of well-known companies because it is the 500 largest companies that are a part of the stock market, United States companies. Now, ETF.com is nice. What I like about this is because you can look up any ETF, and then it has a lot of additional detail. It gives you an idea of what it tracks, some facts about this index fund, and then I really like the rating portion of this, right? So VOO is highly rated on ETF.com, which is a good thing. That's what we want. We want those high quality index funds, and VOO is one of them. So this is definitely a good way to kind of dive deeper into figuring out what type of index fund will be best for you. It also lets you know some other details as well, like if it's underweight in any certain areas. So as you can see, it's underweight when it comes to low size, smaller companies because, like I said, VOO holds the 500 largest companies within the index fund. So that's why naturally there's not going to be smaller companies in there. So it is a little underweight when it comes to that. But I'm very aware of that, and I'm okay with that. I'm okay with that when it comes to investing in VOO within my taxable investment account, my free car investment account. Next up is another taxable investment account that I have within M1 Finance. This is actually a part of my future car fund as well, that strategy. For this one, I'm only investing in an M1 Finance created REIT, so real estate investment trust. And I'm sort of using this as an experiment, but I'm also, because of that, I'm also using it as a part of my car fund strategy. So with this experiment, I'm comparing a stock market REIT, so this M1 Finance Real Estate Investment Trust, with Fundrise. If you're familiar with Fundrise, which is a crowdfunded real estate investing platform. This is how we're looking right now. I've got $990 in there. I put in $1,000 initially. So what I did is I put $1,000 into this, and I put $1,000 into Fundrise. The video, if you want to check it out at whatever point in time I made that video, is in the description of this video. I'll throw it down there for you so you can check it out if you're interested in it. Now, one thing I want to mention is with these REITs that are publicly traded on the stock market, they get hit pretty hard when the stock market goes down. So as you can see right here, at one point it was worth $1,200, right? So watch that number right there. So it was up to $1,200. And then once the market started to crash earlier in 2020, you saw it went down to $739. So this is one thing you're going to have to get used to if you're going to invest in a REIT online or on the stock market that's traded on the stock market, because it's still going to be volatile because it's tied to the stock market. Now, when it comes to something like physical real estate or Fundrise, you're not going to see huge fluctuations in those types of real estate investments like you will with something that's traded on the stock market. So always keep that in mind. Now you can see up here I have a cash balance of $2.30. The only reason for that is M1 Finance won't auto invest until it hits $10. And because with this account I only put $1,000 in, I'm not putting any more money into it. Once that hits $10, then it'll get auto invested. So I'm earning a lot of money or a decent amount of money from dividends. So that's probably what's going to make this cash balance go up, is the dividends that I earned from this REIT. So if we click into this real estate investment trust REIT, this is one, like I said, that M1 Finance chose. They chose what's held within this REIT, and here's everything. They're a bunch of single stocks of kind of real estate related companies. Don't forget, if you're getting some value from this video, please make sure to Hulk smash that thumbs up button. Next up, we have my Roth IRA. So this is my baby, This is the love of my life. With this one, I also hold index funds. So specifically, I hold VTI. I do have, and I have, what is it, 97% in VTI and 3% in a bond, BND. The reason that I have a smaller amount in bonds is because I don't need this money for 20 plus years, and I have a high risk tolerance, as I said before. So because of that, I'm okay with having more of my money exposed to the market to take advantage of the growth opportunity by doing that. So that's why I have 97% of my money, in VTI. The reason that I chose VTI instead of VOO is because VTI holds, I believe it's 35 or 3,600 different companies that are made up of large cap companies. So what we saw with VOO, the 500 largest companies within the United States, and also some mid-size and small cap companies as well. So it gives you some exposure to the whole market. That's why it's called the Vanguard Total Stock Market Index Fund. It makes sense, right? So as you can see, it's got all of the information here on M1 Finance, but we could always do a little bit better. I want to know a little bit more information. So what we're going to do is we're going to take that ticker symbol like I did before. We're going to search Google for it, and then we can take a look at Vanguard's actual website, and we're going to look at ETF.com as well. So on Vanguard's actual website, they kind of give you a product summary, which is always nice if you want to get invested in an index fund, but you're not sure what the goal of that index fund is. This is going to kind of break it down for you. And it also has all of the other information that you're going to need to know about a specific index fund, right? What the sector breakdown is and how it's diversified. So for VTI, you can see 24% is in technology, which is quite a bit if you think about it. But if you also think about it, technology rules this world, and it's not really going anywhere. I kind of look at technology like a utility nowadays. Like you could almost consider Apple or Google like a utility company, because everyone kind of needs them at this point and where our future is going. So because it's a little bit heavy in technology, I don't personally have any issues with that at this point. Now, because this is a total stock market index fund, I'm not really essentially trying to beat the market. My goal with investing in VTI is to keep up with what the overall stock market is doing. So if the total stock market is up 10%, then I just want to try to keep up with that. So I would hope that VTI, and it should closely track that VTI would be up 10% as well. If the total stock market is down 30%, then I would expect VTI to be down 30% as well. So let's go ahead and look at VTI on ETF.com real quick, because this is cool. Once again, it shows you the rating, and as you can see, an A and 99, it doesn't get much better than that, right? So this is one of the main reasons that I invest the majority of my money into VTI. It also got an award, it looks like, the best ETF choice for an average investor in a market segment, which is what you always want to see. You can't beat that. And the fees are super low. Let me go to the fees to show you. It's pretty awesome. See, 0.03%. You can't really beat that unless it's free, which I think Fidelity does have some free index funds, which maybe I'll make a video about at some point in the future. Now let me go back to my M1 Finance account real quick and show you something. Let me just show you, I do have a current cash balance of $4,000. The reason for that is I dollar cost average into the market every single month. So because with an IRA, Roth IRA or traditional, you can invest at this point this year up to $6,000 per year. So 6,000 divided by 12 is $500 per month. So that's what I do. And I actually have this set up for auto invest. What I wanted to mention, these gains. So see all these gains right here. I have $1,800 worth of gains. So it's up 13%. That's almost at this point irrelevant to me. I don't really care about those gains, because the only time that I realize those gains or even losses as well is when I sell my investments. And because I'm a buy and hold index fund investor, I don't plan on selling these things for 20, 30 years. When I purchase something, especially in my Roth IRA, I go into it with the mindset of I'm buying and holding this forever. I'm basically married to VTI at this point, to the tune of $16,000 and essentially, or soon $20,000, because once I get that $4,000 invested, you need to kind of have that mindset if you're a long-term investor. Don't try to time the market and jump in and jump out and jump in and jump out. Do your research, figure out what you want to buy, be okay with buying that for essentially ever, and then just go through the process of purchasing consistently on a regular basis. Next up, we have my traditional IRA. So this one has $4,400 in it. And with this one, the only reason I had this traditional IRA is because with my first job out of college, the company that I worked for only offered a traditional 401k. So once I left that company, I could only roll it over into a traditional IRA. So if you invest in a traditional 401k, you can only roll it over into a traditional IRA. If you invest in a Roth 401k, you can only roll it over into a Roth IRA. For this one, I hold the exact same investments as I do with my Roth IRA at the same percentages, targets, so 97% in VTI, 3% in BND. For this one, I don't plan on adding any more money until I am over the income limit to be able to contribute to a Roth IRA. So this one, I don't plan on touching for a minute. I do plan on making more money as time goes on, because I always plan on doing that because I'm always working towards that. So at some point, I will have to switch over to contributing to this traditional IRA. And luckily, I already have it set up and it's kind of ready to go. So it's going to be plug and play and super easy to get started once I hit that income limit. Make sure to check out this video to your top left next if you want to learn more about index fund investing, where I break down everything you need to know about investing in an index fund. The bottom one will take you to everything you need to know about investing in a Roth IRA as well. Make sure to Hulk smash that thumbs up button. Don't forget to check out the description for more resources and playlists to help you out with all of your personal finance and investing needs